The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
We got Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How
man.
are you?
Yourself?
Oh, very well, thank you.
That's awesome,
Thank
man.
you very much. Can I make a comment real quick?
Absolutely.
For me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who's listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier to make things sound very simple.
That's a beautiful thing, man. Well, listen, we appreciate it. We appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Love coming out of you makes you happy. The whole world can love you, but that is not the love that will make you happy. What will make you happy is to share the love that you have inside of you. That is the love that will make the difference. Market-wise, let's take a look at it out here. We have the Dow Industrials down 92. You get the NASDAQ off 24. S&P's down 7.5. Gold contract down $3, traded at $1,341 an ounce. Silver down 36 cents at $19.75 an ounce. Platinum flat at $1,055. Copper flat at $2.20 a pound. Light sweet crude down $1.70 at $44.63. Notes up 6 ticks, 131.01. Bonds are up 10 ticks, 167.26. Both the notes and the bonds, folks. Bottom line, they continue to set up an ABC structure on the way down. They're bouncing today. They've been higher, lighter volume. Looks like we got an ABC down in the making. King dollar up 4 ticks, trading out at 95.38. King dollar has continued to reject lower price, has lighter volume. King dollar wants to go after that 97.5 area, which is the highs of July. Euro is trading at $1.12, and the yen is at 101.09. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. This is what we have, folks, okay? You get Fed week. You get, they don't raise the rates. Market goes topside, tries to stay topside. Guess what? Right now in the S&P and in the Dow, you get a failure on price, failure on volume, all of the above. The S&Ps and the Dow Industrials cannot handle the gap down from the 9th. What does that set up? That sets up lower prices coming into next week. Right now, we got the SPY trading at 216.34. Next stop is going to be 212.31. That's the SPY. We go over to the Dow Industrials. You're going to see the Dow Industrials also set up exact same way. They get into the gap, couldn't handle the gap, closes underneath the gap, all of the above. Dow right now is at 18,294. What do you expect? That run's going to be down to somewhere about the 17,900 mark. Now, NDX 100 and the composite, they're still over the highs. That being said, bottom line, Monday morning, we very well may not be over those highs. Why? Because it's teetering, and it's teetering in a huge way. So the SPY, the Qs, folks, are at $118.48. And the number we're talking is $118.12. You get underneath that again, false break topside. See ya, don't want to be ya, all of the above. The small caps broke topside. The difference in the small caps breaking topside, and they failed today anyway, just where we are. But that wasn't the highs in the small caps. The small caps high was last June. Okay, the Russell topped out at 12,000. What's that? 12,095. And now the Russell's also going to fail on price, on volume. Gold contract. What do we have with gold? Gold contract, really a sideways move out here today. The intriguing thing about the gold contract is this. So when gold came off its highs, folks, going all the way back to July 8th, bottom line, you fast furious from 1378 to 1334. You get back up again, fast and furious again on August 5th, 1371 to 1340. Fast and furious again the 19th of August, 1357 to 1342. Then what ends up happening is that you get an aspect that we make a beautiful run last week. And what ended up happening is that gold couldn't get to the swing point. On September 6th, gold goes from a price point of 1325 to 1357. Has the wide price spread, has the accelerated volume, doesn't make a swing, however, and then gives it up in spades. Well, guess what? We just did the exact same thing on Fed Day. And what you're going to see here, each and every one of these, you have lower tops, you have more selling, and bottom line, my take, gold wants to get down to this 1259. If you go over to the XAU and the HUI, it's about as deviant as you can get. In both cases, what you're going to see, it's given up everything. We gave it up. We gave everything up 2 weeks ago. We went to 101.75, and this week you got to 101.76, and we're at 95. It's an ABC down. That's my take. Is an ABC down. That's how this is shaking out. And the gold market is the best at being deviant, folks. The gold bugs index, 234, same type of setup. And my take on this, that the run was so extraordinary from January through June and July that this wants to do at least a 50% retracement. And I suspect that's what we're going to get. We've been really at the same place now for 4 weeks. Bonds. We'll take a look at the bond market we have with the bond market. And the kicker here, this is what the kicker is, too, on the way, folks, if you're in that metals market, is that it's not even that the gold contract got hit. That's the bottom line. What you have is that you have sellers inside the equities, because the metals itself hasn't got hit that bad. This is a big deal. 10-year note is up 6 ticks, 631,000 contracts. That's saying it wants to get down. The 10-year note, folks, trades like a million contracts or 1.2 million a day. Okay, this bottom line was going into yesterday's. Yesterday we did 1 million. The prior day we did 1.1. There's no buyers here. This is an ABC structure on the way down. 30-year is the same type of setup. 30-year right now got into a higher high. We did 146,000 contracts. That's half the contract value. There's no buyers. This is an ABC structure on the way down. And let's go to King Dollar. So you had all this movement going on, and King Dollar wasn't even strong. All King Dollar actually did was reject lower price once again. What we had is that King Dollar's trading at $95.40. We had rejected lower price yesterday, trading sideways. This is building cause, first off, to get up and over the swing point of the August 31st, which is 96.21. This wants to go to the swing point of 97.61, which is the July 25th high. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow's down 100, Nasdaq's down 26, S&P's are down 8. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now is down 104. You get the Nasdaq off 28. S&Ps are off 8.5. I got to read you this quote because, we have Wells Fargo. We've talked many times whether it's Wells Fargo, whether it was Goldman Sachs, whether it was Bank of America, Citigroup, all of the above. The bottom line is that part of their business plan, folks, flat out, is just put money aside for all the fines, do as much you can do to make as much money, whether it's through fraud or whether it's true. It doesn't matter because they know they're not going to go to jail. So check this out. This will give you an idea of the landscape across the world. Also, this just came across the Bloomberg, and the quote, the headline: Goldman, no drug cartel. Barroso says dismissing European Union outrage. So check this out. This is normal for Goldman Sachs, though, meaning that Goldman Sachs, folks, gets they not only put world leaders in place, they get them after they're coming out. So Jose Barroso, who was the former European Commission president for 10 years, now this is his quote, said it's entirely legitimate to work for Goldman Sachs Group, and any mistakes its bank has made during the financial crisis were nothing to do with him. I cannot be made responsible for things that the bank might have possibly done in the past, Barroso told reporters in Caracas near Lisbon in Portugal Friday. It's not a drug cartel. I'm working for a legal entity. Could you imagine that you have to say that it's not a drug cartel? I'm working for a legal entity? Okay, so check it out. Barroso's appointment as an advisor to Goldman Sachs on July 8 sparked outrage from European leaders, including French president, who said joining the U.S. investment bank was morally unacceptable. Hollanday said Goldman was implicated in the financial crisis and had helped Greece to cover up its debt, claims that the lender has denied. And bottom line, they've denied it, folks, but they did. They're getting sued on that one right now. The European Commission opened an ethics investigation. And so, this is just wild. The European Commission opened an ethics investigation into Barroso's decision to take a job after European Ombudsman Emily O'Reilly questioned whether it was appropriate for him less than 2 years after his term ended. I accepted going to the bank precisely because the bank gave me guarantees that it wanted to reinforce its culture of transparency and responsibility. Berizzo led the Brussels-based commission for 10 years until 2014 and is advising Goldman Sachs on Brexit and other global issues. Bottom line, folks, it's, guess what? It's a pay-for-play across the world, and Goldman owns most of it. It's pretty amazing. It's just absolutely amazing when you think about it. And when you do a common sense deal on it, think about it. They get the banking structure, they get the Fed, they get the politicians. Now that's the European Union. They get the world, right? Because the European Union in general, I think the Europeans, that's why they're toast, because they made a huge mistake letting Brussels run everything, and that's exactly what they have. Our phone number is 877-927-6648. Let's go take a look at some of the strength. The Dow continues to be the weakest. The laggard inside the Dow out here today is Apple. Apple's down 1.6%. You get Goldman off 1.2. 3M is down 1.2, and Procter is off 1.2. If we go over and we take a look at Apple, what the deal is with Apple, we'll pull it up technically first. Technically, bottom line is that it failed at the swing point. You get failures, by the way, all over the place too, out here, folks. And when you get the type of failure, kind of like what this week is, it's going to be serious because there was plenty of buying that came in the marketplace, and they're going to be at higher highs. They're at higher highs. That's the bottom line. Apple shares are down 2.7%. Research firm GFK said iPhone sales could be disappointed. Suppliers, you get Cirrus down 4%. Skyworks is down 3.3%. Broadcom is down 1.7%. So bottom line, they get some problems. Inside the NDX 100, what do we have? Inside the NDX, the winner out here today, NDX is down $30. The winner is QVC. That's up 2%. JD.com is up 1.9. Discovery is up 1.6. Taken away from it, Alexa Pharmaceutical is down 4.7. That's a big hit, $6. You have Yahoo down 3.5. We get Skyworks down 2.7, and Baidu is off 2.3. If we do go over to, let's go over to Facebook. So Facebook, folks, what you have with Facebook, Facebook had a few advertising problems, talking with their advertisers that they were claiming, well, what Facebook is claiming that no one lost any money. The bottom line is that the amount of videos that they claim they were showing, however, did not show up. That's what it comes down to. The company's owner of the largest social network boosted the figure by only counting a video as viewed if it had been seen for more than 3 seconds. Not included in the calculations was that a person didn't watch or watched less than 3 seconds. Facebook said it was taking steps to fix the problem and that advertisers weren't overcharged. So the bottom line is that what you had is that the videos, they were saying that video was viewed even if it was under 3 seconds. And it's totally bizarre anyway, folks, in the aspect that you're saying that you are looking at something for 3 seconds. I mean, that's like so far over the top, it's insane, okay? The amazing part to me about the amount of money that they're actually taking in, what has happened with digital advertising, okay, is that the large advertising companies own all the large businesses. That's the only way that you get a large company is work with large advertising agencies, and we do. Okay, the correlation is so. Yeah, it's not absolutely fraudulent, but it's pretty close. And what it is this: is that the large advertising agencies have no incentive to crack down on the amount of digital ads that don't deliver. And this is why. There's companies, I've seen a spreadsheet, and there's companies, folks, that's all they do all day long is work on how they can trick the statistics coming in that it looks, well, it doesn't look like they got registered. They did get registered. The problem is that as they got registered, guess what? it was either below the site, off to the side of the site, but bottom line, it gets registered. The advertiser pays for it, and what ends up happening is that the advertising agency, of course, gets a piece of it. So the whole business in that aspect is just totally bizarre. And bottom line, once you get traction like a Facebook gets traction, you're going to get all those big ads. Now, we happen to advertise on Facebook, and we like it, but Tommy's placing those, and we're very careful of how we place them. We make sure it's a different ball game. But when you get, we're tiny. So when they get so big, the bottom line, they can, they're not checking them. They're not saying, is it out there? Isn't it out there? So it's pretty intense. And we're talking hundreds of millions of dollars. There's a paper that was established by these large companies about how much they're getting taken to the cleaners. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's go take a look at some of the higher volume stocks. Well, actually, TWTR, Twitter, you get the... that little baby is up $4 today, $22.72. The rumor is that, let's see, that, okay, Twitter's holding informal talks with several potential buyers and is working with Goldman Sachs to help possible sale. Salesforce.com is one of the main parties interested in the San Francisco-based social company, said people. I kind of understand why Salesforce.com would be... in Twitter, but hey, we'll see. Twitter co-founder and board member Eva Williams fueled takeover speculation last month when he said in an interview that the company has to consider the right options. He was regarding a question on Bloomberg TV about whether Twitter can be made an independent company. What's amazing is that the bottom line is that they are just basically pushing out, praying that someone's going to take them. That's it seems to me how this whole thing shakes out. When you take a look at Twitter, if we bring this back, what you're going to see is Twitter, since its IPO, was a one-way deal. We bring this back, Twitter, the month of its IPO went from $40 to $74, and then straight down to $13.91. And GPRO, here's another one, GoPro. GoPro's got some juice in it today. They're coming out with their drone cameras. That's up $1.24 today. And if we take a look at this one, this is the same. It looks just like it, actually. GoPros went from $98 down to $9. Right now, you're at $17.28. There's no doubt that they're coming out at the right time for a drone, though. And we'll see what this shakes out. Actually, it looks like a small ABC up. So you got 1088. Let me put this on a weekly for a second. Yeah, you can ABC up. So this could be interesting for the Christmas holiday. Let's see. I can make it 862. Yeah, it's not bad. $8. So, well, it's 1720. That price projection is approximately $20, but that's not bad. That's not bad at all. We go and we take a look at the euro, and what we'll have. Actually, I want to. Okay, so the euro out right here right now, folks, is at 23.74, and it looks like it couldn't make it higher. Couldn't bust that baby out, getting up into this 24.20. So, oh, sorry, 1 second, hold on. I pulled up the euro, but I pulled up the euro in the aspect of an ETF. Okay, so now we have the euro. The euro is at 112. And bottom line is that, yeah, you have all lower highs. Pretty amazing, actually. We had all lower highs going all the way back for 6 months. It may be longer than that. I just have a 6-month chart up. So this is the bottom end of this consolidation at $1.11. That's where it looks like it wants to go. The yen still doesn't have much movement in it. The yen's been hanging out here at that 101 area, and that correlation between the yen and the metals is pretty intense. The thing that so if the yen gets weaker, folks, that's when gold and silver like to get weaker. The amazing thing out here today, to me, is that you have so much weakness and they really didn't move that much. If we go, well, let's go over to silver for a second, because silver did move. Silver is highly volatile, no doubt. Silver came down 32 cents. Silver also, now this is going to be crazy. Silver also couldn't make its swing point, which is $20.23. It made $20.14. So SI will put this on a continuous contract. And what we're going to see, yeah, you're going to see that it's in this, yeah, he's still in the range, and it couldn't make the range. So silver is also saying it wants to get back into this 1641. Let's go take a look at UNFI. UNFI for one of our tigers. Okay, so let's see what we got. United Natural Foods. Okay, they distribute natural foods and related products. Okay, so the low is 28, the high is 55, the PE is 15. I see what he's looking at. So you're coming back into a gap. Okay, so put this on a monthly. Okay, so we put this on a monthly. 2009, it's at $12. 2015, you're at 83. Nice. Then you come down to 29 again. Now the real question is, here's the volume. You're pulling back with lighter volume. What I'd do, I'd let this 42. You're already into 42. Well, put it on the weekly. Because you're already into 42, this is actually a problem. It's not a problem. It's just that you wanted to. The first place to look at it, Mitch, would be 36. 36 is the high of its high volume low. And more than likely, the danger here is that this is going to go after its high volume low. You know, that's the danger. And, you know, you did have a sign of strength, though. What he's looking at, you had the high volume low. What you didn't get is you didn't get a test of that. And then you did come in with a sign of strength on the week of June 10th. But then you see what happened last week. Last week, it doesn't negate it, but it just about negates it because it came down so strong. So I'd let this go test the lows, and I expect you'll see those test the lows in the next few weeks. That's the way it seems to be setting up. We take a look at the volume. Well, here, we'll do the volume on the weekly so you can see this correlation inside the failure, inside the Dow, inside the S&Ps. So if I put the diamonds up, because I know everyone has the volume of the diamonds, what you're going to see is this. The high of the diamonds, $186 and 87 cents. We came down. It's still an ABC structure on the way down. You hit lows and you hit it with 24 million. We got to a price point today, this week rather, of 184.26, and it couldn't hold it. And in fact, you're going to close under the highs of last week, and that's a clean ABC structure on the way down. We go take a look at the SPY. What you're going to see inside the SPY is the same SPY is the same type of setup. We put this on a weekly, and what you're going to see is that we got to a price point out here this week of 217.53. We're going to close under 216.81, which was the high of last week, and you have a lighter volume. See, the kicker here is really a trip. When we came down with 786 million. We're up on 390, and that couldn't even make. When we came down off the highs the week of September 9th, you came down with 408.28. There's more sellers than buyers. That's the bottom line. And the NASDAQ actually is showing that even though the NASDAQ is at highs, the NASDAQ is actually showing it in a better situation. The reason being is that if we take this and you put this up, what you're going to see is that you're just barely over the $118.12, and you get dramatically lighter volume. We've done 107 million versus 180 last week at lower lows. You stay right there, folks. We'll come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. So Dow right now is down 110. You get the NASDAQ off 29. S&P's off 9, folks. And if you'd like to test my daily newsletter, the way you do it, you come over to our website at TFNN. Go to newsletters. Go to trading newsletters. You'll see market insights. You can test drive that for 2 weeks. If you'd like to test drive the gold report, you can do that for a month. You go to newsletters. You go to investment newsletters. You'll test drive that for a month. Let's go over and take a look at the IBB. So the IBB is the biotech index, NASDAQ biotech index. That's trading at 298.44. And guess what? Can you say failure on price, failure on volume? You got it all, folks. The mind blower is that when you have such large numbers and they get up there, they like to test them, and they just can't handle them. So what do we can't handle? The IBB can't handle the $299.25. That's where it broke down from the third time because the IBB highs are much higher. We did 3.7 million shares there. Well, today we did 900,000 and couldn't handle the price. The same sellers up there giving it to anyone and everyone who thinks it wants to get higher than that. Now, that's on the daily. On the weekly, what you're going to see is the same type of setup. On the weekly, we've been here for quite a while. Weekly, this week, you're going to do 7.6 million shares. You're going into 10 million. You get a failure. So what ends up happening there? Can't bust them up. Guess what? Now we're going to make a run for the $276, $240. It's the $240 level. That's where this baby wants to get into. REGN, Regeneron, okay? And as one of the targets said, where the IBB goes, Regeneron could go. And that's possible. There's no doubt about that. Regeneron, you talk about a powerhouse here. This is a powerhouse that started out in 2012 at $156, makes a high at $605. You're trading at $411. Same type of setup as the IBB. And if we bring this back a little bit closer, let's see what we have here. So, let's see, $411. This is what the difference is. We're at $411.61. You close over that. That means that Regeneron can go higher, 424. That's your number. Your swing point is on the 16th of September on the daily, and if you put this on the weekly, it's going to be that week. And yeah, that's how it's set up right now. So we'll see how that does shake and bake. When you start putting this together, folks, what you're going to want to keep your eye on Monday, and I expect what we're actually going to see here is this. Because our markets couldn't hold, Asia's not going to hold. Asia was down last night. Europe was down this morning, okay? They're looking at our markets, and anyone and all these large funds, okay, move around the world like in a split second. Our markets not breaking topside and following through is a huge heads up for the rest of the world markets. So what I expect you're going to see here come Sunday night is you're going to see Asia slightly lower. We'll see Europe slightly lower. And if we stay with the NASDAQ composite for a second, what I expect you're going to see is that the composite more than likely is going to have a nice island top up here. The composite will probably, it only has to, so the composite only has to open, if we closed right here, the composite would only have to open 23 points down. And then in the NASDAQ, that's nothing, folks. That's a joke. And then what you're going to have, you have a nice island top that's sitting out here. The SPYs, the S&Ps, and the Dow, they have more than one. If you want to see something that's really bizarre, and I've seen this a few different times, the SPY has a monster island top. And that island top goes all the way back from August 4th. So August 4th, we gapped topside. September 9th, we went downtown. Now it's got a second one. It's only a tiny one, this one here. But that island top, that's what's stopping it. Everyone's trapped at the highs. As it gets up there, they're trying to get their money back. But what you have more so is that you have a monster selling up there. That's what you have. It's not going to be just those folks that are trapped at those highs. That's the selling point. And that's, right now, my take is that that's what we have inside the gold market also. Inside the gold market, there's a very large seller that's laying out at about 1360. So we'll see where that shakes out. We just pulled up the SPY. If we pull up the diamond, you're going to see the diamond, the exact same setup. It's intense. Same days and everything. July 14th in the diamonds, and September 9th on the way down. And these are big numbers. So what we do also have is that, let's see, 180, 142. Right now you're at 182 in the Dow. But let me bring this back a little bit further, because I believe what's happening with the Dow is the weakest indice. And more than likely that has to do with the aspect of the dollar being so strong. Yeah, see the Dow, is that inside that? Yeah, the Dow is. The Dow's inside the Dow is a false breakout. The Dow is back, couldn't get back outside, failed at the breakout. That's the bottom line. Let's go to Dano in Clearwater. Hey, Dano, what's going on?
Hey, Tom. Happy Friday.
Happy Friday to you. Thanks so much, man. Appreciate it.
I'm actually out at St. Pete Beach enjoying the beautiful weather.
Oh, isn't that cool? I'm going to be there in a little while. I like that. Oh, that's awesome, man. And, folks, if you've never seen St. Pete Beach, you should see it. It's huge. The sand is so beautiful, man. Amazing.
Yep. Highly recommend it. Have a question for you about Cracker Barrel, CBRL.
CBRL, okay.
Yeah, I have a short position in it since 153, and it looks like it may have come down and finished bottoming, but on the 21st, it did something really weird in the morning, like the first two 10-minute bars, and I'm wondering if that's a sign that people are still selling the stock and getting out of it.
Well,
and if so, should I stay in it?
You got yourself a heck of a trade. No, I'd stay right there. This is a breakdown. This is a good breakdown. Last week, folks, so last week we came down. You came down with 4.4 million shares. And what happens is this, is that it already broke all the support that it had at 152. And it's like the next floor down, man, is at 130, 121. You know, and what happens is that when you break something like this, and that should have been pretty good support there, and it just sliced right through it. And if you want to see something when it breaks support, folks, you hear me talk about wide price spread, accelerated volume many times. That's what that bar does. And when you have a nice bar like that, it does two different things. It shows you the type of strength and the type of selling that you have in this case. Now, because there's nothing in the middle, it's like, okay, this can just drift down to the 121 area. No, I'd stay right there, man. You stay right there, you jump in the water, have some fun.
That's right.
Seriously.
Okay, great. Hey, I appreciate it, Tom. I really appreciate what you and your whole team there does.
We appreciate you growling and prowling with us out here, man. Have a great one, man. Have a safe one. And folks, come on down and visit us. I mean, our beaches are insane. In fact, we want to come down in the next couple of months. The fishing's insane. This is where, so picture what happens, folks, is that it's pretty cool. In the winter, of course, what we have happening now is that all the fish that came up from South America going all the way up the New England coast, they come all the way back down. So we get it twice. So for the next 6 weeks down in the Gulf, all the fish are like running all the way back down. They want to stay warm. You stay right there, folks. We're coming right back. Dow's down 119, Nasdaq's down 31, S&Ps are off 10. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 106. You get the Nasdaq off 27. S&Ps are down 8. So what you have is this. Bottom line is that you have the Dow failed on price and volume on the daily, on the weekly. The S&P failed on price and volume daily and the weekly. Nasdaq and the NDX 100, they're still at highs. Russell 2000, let me just check the Russell one more time because the Russell was very close. It looked like it was going to fail. Russell 2000, let's see, Russell failed also. Russell also failed on price and volume. So come Sunday night, folks, you can expect high volatility. The amazing part about these failures, oil. We got to bring up oil. What happened with oil, folks, the oil market croaked in the middle of the day, folks, and what it was is this, is that the rig counts came out, and the rig counts have never been so high. This is the highest they are in 7 months. So what ended up happening is that the whole oil business, of course, as oil had gone up, they got the rigs going again. Huge amount of rigs out there. What did that do? That took apart the oil market. Oil right now is trading at the 44.85. Monster volume on the way down. So oil looks to me like, number one, it's going to go right back into $44.77. How's that, Mitch? You got to love it. Bottom line, what we'll have to do first is get to the lowest swing point from last week. The last week swing point, actually on Tuesday's swing point. Tuesday's swing point was 43.06. Big volume, though, and, I suspect, these rigs aren't going to go away, folks. Each and every time that oil does get up to higher price, picture if you owned an oil, you get an oil well. You get oil up to $45, $46, $47. You're going to be selling it. The oil market, if we happen to be in the oil market, flat out, this is not only highly volatile, but I'm sure after this downtrend, that the folks that are in the oil market won't forget when oil is at $26 in January. All of January, most of February, until the middle of February, oil was trading at $26. You had the nice expansion up to the $51 area, but other than that, bottom line, they're looking at, say, we can be right back down there. Whereas for many years, oil stayed up into this $86 to $100. We were at $86 to $100 going from, February of 2011 over to October of 2014. So we were at those higher levels for a long period of time. What we also will have out here today is that you're going to have a market that tried to reach to higher highs, failed, volume light. Right now we're only 629 million on the NYSE, which is just a mind blower. And on the NASDAQ composite, you're at 1.578 billion. So even with the aspect that the Fed is not going to raise rates until at least December, the market itself is saying, guess what? I want to sell down. And of course, next week, hold on, next week, Monday night, you got the Trump-Clinton debate. That's going to start at 9 o'clock. And that's going to rock, I suspect that's going to rock markets. Who knows what's going to be up or down? And, we'll find out. But I suspect a lot of people are going to be watching. The futures are opened. Asia's opened, all of the above. The market has been watching the Fed for quite a while. Now I expect what you're going to see, the market's going to be watching politics for the next 6 weeks as to where we go. And we'll all be basically speculating as to what does that mean if one wins versus the other wins. And we're going to have, this is the amazing, we're going to hear a million different scenarios as the market going up and down. Guess what? It's a beautiful thing. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Go have a blast with it, folks. Look forward to speaking right back here Monday morning, 8 o'clock.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.